Hey traders, happy Monday. It's a bank holiday today, and hopefully the rest of the day you've got some good stuff planned, but it's charts and coffee time, and time to, as we like to say, caffeinate and dominate. So let's do that. Great to see everybody. Good to see you all. So yeah, we're not really any rush today. And if you're a Golden Girls or Betty White fan, Google Betty White today, and I think keep your speakers on too. Just a little non-trading fun this morning. So we've got a lot of time together. I definitely want to go through your questions because a lot of times in our 9 to 9:20 format, before we all go into our respective trading rooms here in the Simpler community, I run out of time. So today, if you have a question about an indicator, kind of an Ask Me Anything Monday, bank holiday, charts and coffee. So as always, I can see who my diehards are. I love it. I love it. All right. So, well, let's get to it, shall we? Let's get to it. The show is always about your questions, and let's get to it. All right. So first up, yes. Good morning. Good morning. How you doing, Win? Good morning. Oh, and the Chiefs. Wow. I'll tell you what, they had quite a game yesterday against the Steelers. Amazing. Mahomes, I mean, they were just firing on all cylinders, weren't they? I was kind of, I wanted to see Ben. This is probably his last season, last game. So I was kind of hoping he'd have a good game, but we all know the Chiefs are they're ready to make a run at the Super Bowl again. All right. Megazord. Hey, I can't help but notice that I don't appear to use the squeeze. Okay, sure. I get that question a lot. What are my thoughts on its validity or utility? In the end, is it just different or not my style? Oh, fair question. So here's the thing, gang. And I love the question. The idea that we all use the same indicators and same tools and that we all thrive, that we all do well in the same kind of market is the first difference. Why do we have so many different traders here at Simpler, on this side of the mic? Because we all have a different style. So, when I look at the way I look at the market and the tools that I use, they're unique to what I do and what I believe. You all know I like old, Darvis and kind of the moving averages and Charles Dow and, what influenced me. So I'm going to tell you all a story since we have a little bit of time today. So for those of you that don't know, our flagship indicator here at Simpler, because John created this early in his career, is known as the squeeze. And so years and years and years ago, this predates Simpler. This predates, I think, most of my books. And I think this might predate John's book too. So John's down in Fort Lauderdale. I live in South Florida. John's in Fort Lauderdale, and he's teaching his trading style in front of this pretty sizable group. I don't know if it still exists, but there was a pretty large trading investing group in South Florida. So he's speaking to them. And I know of John. We used to write for one of the a website. We both wrote for it. So I knew him via the internet. Didn't know him really personally. And at that time, so he's teaching. Back then it was the Keltner and Bollinger. It really wasn't automated to the way we know the squeeze, today. And I remember thinking two things. Wow, this guy has decoded momentum breakouts. He's figured out that in a game of musical chairs, which is what momentum trading is, how do you get that split second heads up that the music's about to stop and you can get your butt in a chair? That's what momentum trading is all about. Can you be there just a little bit, just a step earlier than everybody else, right? So I thought, wow, but here's the thing. I'm not naturally a momentum trader. So it's not that I don't think the squeeze works. I've been watching John use the squeeze for 2 decades, right? Because like I said, we used to write for the same site. It's just that that's not my style. Now, if I have enough compression in a market, if I start to see a steady string of not only a narrow range, preferably a narrow Darvis and blue grab candles, I'll turn on a squeeze. Now, what's really great about being here at Simpler is things like voodoo lines. If we're at a fire line, tree line, things like squeeze, they're so commonly discussed that I'm going to hear just through the natural conversation within the community. Someone's going to say, hey, Rog, there's a tree line there. Or hey, Rog, there's a squeeze firing off. And that's one of the great things about the community. So many people are looking at different things, and I can see how it overlaps with my work. So I do keep an eye on it in a specific environment. And if not, again, the regular conversations here within Simpler cover that for me, which is what's so great. Lots of eyes on the market, working as a team. So yeah, fair question. And that's my answer. He came down. Oh, I didn't tell you the funniest part. So I thought, this guy, he's decoded momentum trading. My second thought is, boy, he's cute. So anyway, that's my introduction to the squeeze, and that's where it falls within my overall trading approach. Okay. All right. Thanks for the question. All right. Ronaldo asks, Raghee, can you check XLU and LCID? Sure. Two very different markets. Yeah, absolutely. Let me grab that here. So XLU, I was just looking to see specifically where I got filled on XLU, because we're long XLU and it's just sort of chopping around, but it's still valid. It's still very much a valid trade. So yeah, I'm pretty much just sitting in a trade that's waiting to get that move. And by the way, 4 blue grab candles in a row, I'm looking for a momentum move at this point. So XLU, I'm bullish. Now, why would I be bullish? Let me grab my drawing tools here. Why would I be bullish? Shouldn't sideways markets be sort of a neutral? I don't do that. So what I want to remember we can do is, I've got 4 blue grab candles in a row. This to me is a little bit of a neutral, right? A neutral market environment. In a neutral market environment, I can also see my JT multi has compressed to that, it's showing the compression. It's moved to yellow over yellow, which is also, again, a second confirmation of neutral. But then I look at the trend that preceded, right? Now, remember, there's 2 types of sideways markets. We have the wider chop, where we're looking for that overbought, oversold. And we have the narrower compression, also known as accumulation or a narrow channel, what have you. That's more of a momentum breakout. So the 2 environments, you really want to distinguish between 2 types of chop. Since the trend that preceded was up, I'm going to be looking for a move to the upside. Now, sometimes we can sort of front run the move by cutting the range in half and getting long in the lower half of the move. And then also decreases our cost, decreases our risk. So that's an approach you can use in that kind of market. But I am looking for a continuation. We go up neutral, I'm expecting continuation. That's the higher probability expectation. All right, LCID. LCID, now let's think about where LCID falls within our overall approach to understanding relative outperformance. Relative being the key word. What is in the same group as LCID? We'll have to look at that as well. So we've got BAT, not a really liquid ETF, QQQ. We can take a look at those particular groups. But in this case, this is chop. You can see we've been chopping since the 8th of December. If we get down to the lower half here of the chop, and by the way, take a look at the way in which the darvis, right? The automated support and resistance of the darvis is identifying where support is. And then you add in the point of control, which is that sort of grayish line right there. There's your oversold area. That's where you want to look to your slow stochastic, right? That's where you want to look to whatever oscillator you use. I teach a slow stow. Maybe it's a ready aim fire. I'll use those 2. Those 2 are the best. One's free, a 21K 3D slow stochastic, and the other one's a premium indicator, and that's the ready aim fire. Those are the 2 best ways to go. So the overall approach to looking at this market bouncing off the darvis would be, let's wait till we get back down there. Now, something a little bit more nuanced and a little bit more aggressive, all right, is looking at a 50% retracement within the chop, which is sitting right at about 40, 60, 40, 50. So that's the way I would look at Lucid. I'm bullish, just it's chop we're dealing with. So I hope that makes sense. All right, next up, Michael. I just signed up for a futures trial. Very cool. What is the difference between futures room and the sector secrets mastery? So Michael, when Trish and I were coming up with a concept for what we were going to do in sector secrets, it was definitely influenced by the way in which I trade ETFs and the equities within them, because I didn't really want an overlap. I didn't want to have a situation where traders were thinking, oh, if I want, to see your futures trading, I got to sign up to two places. No, my futures trading is still in the futures room, and my equity and ETF trading is in the sector secrets mastery room. So we've separated the asset classes. So depending on what you want to trade, that's where you can find me trading that. Now, having said that, of course, because the primary, probably the most popular futures contracts are, of course, the indices, right? Everyone wants to trade the indices. And when we trade indices, we're trading sectors and we're trading stocks. So there's a little bit of overlap. We have ETFs that cover the indices. So there's a little bit of overlap, but I really try to really differentiate the asset classes. So, if you want to follow one type of trading, meaning the futures, you know where to find me. And if you want to follow ETFs and stocks and the way that I trade options on those, that's the mastery. So I hope that makes sense. And that way, you can make an informed decision. All right. Next up, Azendi, how are you? Good morning. I was looking at the Darvis box and wanted to learn more about its usage. How do I use it to confirm a range or breakout? So Darvis is I know most of you know this because we've been making this tool available here at Simpler free since 2016, 2017. It's been a while. I can't recall when we actually did that. We have a number of free tools here at Simpler, and they happen to be 4 of my core tools: Wave, Grab, Propulsion, and Darvis. Wave, my moving averages that help identify dip buys. Grab, my color-coded candles that help you understand the underlying market structure, the market phase or trend or whatever verbiage you like to use. Propulsion, which is a great way to automate moving average crosses and sort of create a smart moving average. And then finally, Darvis. So Darvis is influenced by, of course, Nicholas Darvis. Is this true Darvis anymore? Probably not in the original sense, but we've modernized it. And it's the absolute best way to automate support and resistance. And it's free. I've always made it free. Now, if you understand the concepts of support and resistance, my friend, you can use Darvis. Pull up any chart that you'd like and ask yourself, where are the Darvis plotting? Right? There they are. And they're constantly looking for these minor highs and lows. Now, I don't care if you call these swing highs and lows. I don't care if you call them minor highs and lows, turning points, ham sandwiches. I don't want to get stuck on the jargon. They are, though, key turning points in the market that help us identify what previous support and resistance, previous highs and lows kind of push forward. So look at it this way. This is the way I've always taught it. There's really 2 kinds of support and resistance. The kind that is influenced by what has already happened in the market and therefore plots based on previous price action, leaving a high or a low behind, call them breadcrumbs, right? And then there's the kind that projects support and resistance. Fibonacci would be a great example. So they're very different in terms of, are you looking at a level that was important before and carrying it forward, or are you projecting a level like an extension? So these are the variety that is not a projection. These are, where has the market turned before? It's likely we're going to see something similar going forward. So if you're looking to confirm a range, though, Darvis is fine, but start with the blue grab candles. Start with understanding historical volatility and what a narrow ranging candle would be. So I wouldn't start with the Darvis. I would start with the blue grab candles, maybe start with a yellow JT multi lower reading, and then, make your way over to whether or not we have a Darvis, because the Darvis doesn't have to necessarily plot showing that narrow range. So there's so many ways we can do it. That's how I would recommend it. And then as far as a breakout goes, again, it goes into the underlying market structure. Because remember, if we have a Darvis and it's wide, I'm going to be a little bit more likely to fade, meaning short the ceiling, buy the floor, right, within the chop. That's where the slow stochastic comes in. That's where I teach automate your support and resistance, and then use a slow stochastic, right? Okay, then if we have a narrow range, we don't want to use that exhaustion approach, that fade approach. We want to wait to kind of earlier the question about the squeeze, we want to wait for a momentum breakout. That's the difference. All right, that's the difference. All right, so moving on. What are the chances Google can rise from its coma? Tech is going to struggle, Ron. Tech is going to struggle, and it's probably going to continue to struggle. It's probably going to, as long as this TNX is green over green and moving higher. This is actually the 10-year yield, right? What is the actual yield on the 10-year note? And if you're looking at this from the futures perspective, this is as long as that ZN futures contract is in a double red heading lower, 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 then we know that we probably are going to see tech struggle, whether that be QQQ and Q and the heavily weighted stocks like Google that are weighted within it. Makes sense? So that aside, let's talk about what we're seeing right now. What we're seeing right now in Google, let's go to Google. That'd be helpful, right? Okay. What we're seeing right now in Google is, by the way, let's go to the very bottom. Let's start with the market trend, the market phase, the market structure. Doesn't matter what you want to call it. What is the behavior of the market right now? It could only be trending up, trending down, in a sideways narrow range, or in a sideways wide range. I'd say it's the latter. It's the very last one. It's a sideways wide range with a lot of bearish momentum. So with that being said, I'm still in the mode of where's the support? Where can we find support? Now, I can look at, see this right here, that arrow with no line? This is a specific pattern that has to precede a darvis line or the box. Sometimes the darvis criteria doesn't follow through, but the actual pattern occurred. So we get a nice little arrow there saying, hey, that's an important turning point in the market. Keep an eye on it, right? There's one level there. We have the actual low here, right? We have some interesting volume ledges in there, right? So those are things that I'll watch. It's a wide range, though. That's what's going to be tricky. So scaling in tactically is going to be really important. So what are the chances? The chances, to me, work like this. If we have buyers waiting in this area, we have mostly buyers waiting in this volume ledge here. If we have buyers waiting in this area, at least that's support. But support is not necessarily a bounce or that momentum that sends us back higher. We're going to have to see not just holding that support level, but then that move back out of that zone. That's the tricky part. So what are the chances? I think the chances are reasonable as long as that support zone holds. And then we need a catalyst, right? Then we need a reason. And earnings are right around the corner. Is that going to be the reason? Maybe traders are jockeying for position long in front of that event. That's going to be the question, right? And that's, quite frankly, I remind myself every morning when I sit down to trade, I don't know what's going to happen today. Newsflash, you all know this. Nobody does. But I do know what I want to do when price reaches a certain level. So if I want to be a buyer in that zone, I know why and I know where. And I know what I would expect, but I do know that I can't be alone in a trade. There's got to be some other buyers there. Support does start to entice more support. And then the next domino that falls is all of a sudden, if we move higher a little bit with good support, it starts to entice the momentum traders into the market. That's the process we need. Okay. What's my macro view of the yen? Ross, I don't know that I have a macro view of the yen alone. I'll be straight up. I have a view of what I think the yen and the US dollar are doing. And I still want to be primarily long US dollars, even though the dollar had a pretty rough week. And I want to be short yen as long as I think there is some risk appetite. Now, macroeconomically, we're going into a tightening cycle. We're expecting one here in the US, which would mean that I'd rather be long dollar versus yen. But let me show you another layer, because if you're asking me about yen, then I'm just guessing. I could be wrong. Let me know otherwise, but I'm guessing that maybe you're also looking at Forex and looking at how you can trade yen against other currencies, not just the US dollar. So then I'm going to ask myself, going back a little bit longer term, yeah, there's not many currencies that I can actually short the yen against. So, all of a sudden, shorts in Aussie yen, New Zealand dollar, Japanese yen, maybe even euro yen make a lot of sense. So it depends on what your driver is, right? If your driver is, I want to be long yen, look to the right side, right? Look to loonie, euro, Aussie, Kiwi. If you want to be short yen, look to Swiss, look to greenback, look to the, look this way as opposed to, right? That's what I mean by driver, right? Do you want to be long or short yen? And this lays out why. I hope that makes sense. And thanks for the currency question. I appreciate it. All right, moving on. Good morning. Good morning. All right, NASDAQ. What is our plan with the NAS? Sure. All right, jumping into NAS. And Peter, of all the things I could do with the NAS, based on, again, structure, let's talk about where we are right now. Neutral structure, lower JT multi, right? Trend that preceded was up. So I am bullish. So you can have a neutral market. But Charles Dow, 140 years ago, taught us how to treat choppy markets. The probability is still with the trend that preceded the chop, right? And the trend that preceded the chop here was bullish. So the easy, I mean, how much easier can this be, right? Color-coded simplicity. So I know that the previous lower green here, the structure of the 81321 was bullish. Then we went neutral. So it's really easy. This is bullish bias, right? Yes, we're neutral, but the bias is bullish. Another reason the bias is bullish is we're still above the 200 exponential moving average, right? So that's what these dots in that line are there to tell us. So ultimately, here's my support, right? That's my resistance up in there. Thank you, Darvis, for automating it. And then we have here and here. That's the zone. So I want to build a long position in this zone of support with initial expectations of really not going much more than about 50%. That would be around 15,850, 860. So that's what I'm looking at on the NQ. I'm not bearish. I can't be. Right? I'm still in a neutral overall environment because of the lower JT. Now, I know the previous trend was up. The near-term momentum is pretty bearish, meaning we're probably going to keep pushing lower. So I would love to see yellow over yellow. That would show us that the 81321 is sort of also going neutral, while the trend, the 34, is also neutral. So if we go yellow over yellow, it's an easier fade. Red over yellow means there's still some near-term downward pressure on this market. And that's how easy it is to look at the colors, right, and determine that. So I hope that helps. And that's why I separate, by the way, 81321 from 34 on that JT multi. All right. Okay, so that is the question for the NQ. So hope for the world. And Peter, that's my take on NQ. Tracy asks, what is the best indicator for day trading? Tracy, I'll tell you what, I don't believe in a best indicator or a best time frame. I think that I don't believe there's such a thing as a best for day trading, because one of the things I've taught throughout my career, I remember reading, so I picked up, some of you might remember, super charts way back in the day. In the 90s, I got a copy of super charts, and that's how I was charting the market. And then later on, I graduated to TradeStation, which back then was a really big deal if you were a retail trader to be using that platform. And inside back then we got our installation discs, you remember? So they had a copy of a book called Trading as a Business by Charlie Wright. I remember reading that. And my takeaway from that really was two things. One, if you're going to build a system, and this would apply to trading strategy as well, you have to have a system for trending markets and non-trending markets. The other thing was the idea a lot of systems traders talk about is having something that's both universal and robust. What does that mean? That means it should work on everything and it should work well. So my idea then became, if I'm looking at the NASDAQ, I can't apply a completely different strategy to the S&P when it comes to indicators and strategies, right? Then I'm really curve fitting. So then I realized, okay, I should really be able to use the same tools and the same settings across all my trading. And that's what I did all those decades ago. So big shout out to Charlie Wright and the book that came with super charts, in the 90s, and just how grateful I am that influenced me the way that it did, over 2 decades ago. So I don't think that's a best indicator for day trading. However, if there's something that's overlooked in day trading, it's probably this: time and volatility. Time and volatility. I think we all look at price. I think most of us have multiple indicators, and most indicators are based on price. So there's a certain redundancy there, isn't there? What I have found has moved the needle for me in my day trading is looking at the time of day, because certain things tend to happen around the same time of day throughout the trading day, and volatility. What kind of historical volatility do I have in a market, and how is the market behaving in terms of that expectation? So I hope that gives you something a little bit different, but I don't believe there's a best, right? Whether it be mine or anybody else's, I don't believe there's a best. I think there's some things that are overlooked, though. There's so many ways to successfully day trade. And I just think that, another thing that's oftentimes overlooked is volume, volatility, volume, and time. We as traders are also collectively covered, right, by our processes and our indicators. We've got price covered. I'm going to guess that most people in this room do not need another price-based tool. I don't need another price-based tool. I haven't even been creating price-based tools. What I've been focusing on in this part of my career is, how do I measure volatility? How do I make myself and my traders more aware of time? How do I understand volume better? And that's something that I've been doing more and more of since about 2018. We have enough price-based indicators: volume, volatility, time. That's the evolution of where I think most of you will find your need for information from an indicator will be. All right. Hope that makes sense. All right. Paul, I try to follow the seasonality for the S&P. Okay. Well, let's jump on over there. I don't let seasonality be the primary way that I understand a market, but clearly it is one way that we can understand a market far better. And so let's jump on over to the S&P. And for that, let's just jump into the ES. Okay. So, I lost your question there. There you are. I'm confused where we are in the historical chart on 20 years. I have not been going back that far, Paul. I've been preferring a little bit more near-term analysis based on the current monetary policy that we've been in the last 5 to 10 years. So I'm not going back 20, but where are we? Historically, 5 years and going back about 10 years, 9 years here, we're at a bullish stage to about mid-February. So if you've been following some of the free videos that I record, Paul, one of the things that I've been talking about is, after a brief sort of divot, I called it a divot, little divot in early January, we're usually pretty clear sailing till about mid-February. The problem is right now, and this is something I talked about in December, we've seen choppy markets. We've seen choppy markets in the past. One of the reasons I didn't treat them as chop, but rather a very likely continuation pattern, is because we hadn't shifted away from a very accommodative monetary policy. The chop that we're experiencing since end of November, December is very different chop than we've seen before this. The reason for that is, this is the first time we've seen chop in many, many years that is accompanying a hawkish leaning Fed, right? This is the first time we've seen a distribution choppy market since the Federal Reserve said, yeah, we're going to hike rates. We haven't seen a rate hike in a while, not since December of 2018, right? So this is where this chop is now happening in a very different macroeconomic background. Macroeconomics meaning, what is the rate of inflation, the rate of change of inflation, growth, money supply, monetary policy. Those are the four pillars of, and you can add a fifth because of the dual mandate, which is jobs. So this is a very different environment. So as much as I am looking at the seasonals, Paul, it's probably going to be more important to listen to the message of the Federal Reserve. I imagine Lyle Brainerd's going to be the number two. She's pretty hawkish. She's pretty focused on inflation. So I think it's going to be a little bit more important to find out how the Fed is messaging the likely March rate hikes. And then are we going to get more hikes? What pace are they going to be? That'll probably eclipse the seasonality. All right, Paul, that's where we are right now. Hope that helps. All right, next up, Awana, good morning. The futures clearing range trading, it's transparent on the dollar amount for the target stop, but for options trading, what would an average percentage per winner? Oh gosh, I can only tell you the percentage for risk because that's the only thing I can control. So what's the average? I don't even know. Here's the problem with average. Some days the market won't move that much, right? We won't even get the average percentage. And some days we're going to see a massive move because we just have one of those grind higher days. And so I always think about average loss, which is going to be somewhere between, if I'm playing the options, 10 and 15%, sorry, 15 to 20%. I'm over caffeinated today. 15 to 25% of premium paid. But as far as targets go and average wins, I'm looking at the value area high or the clearing range high. So that's going to depend on the range that was set in the morning. That's the part I can't control. I can't control where the market's going to go in my favor, but I can control the risk. So I hope that helps. But again, value area high, clearing range high, those are pretty important. All right. Good afternoon from the EU. Yes, good afternoon. Do I have any European sectors on my watch list? Or more generally, do I have any meaningful allocation outside the US market? Most of that is longer term. But as far as what I'm watching outside the US, what I usually do personally is I'll go through the country ETFs. And when the country ETFs have good clarity, like any market does from time to time, I'll start taking a look at those. EWU has my attention. That's the UK. EWQ. If EWU gets moving, EWQ will oftentimes start to follow suit. I've been keeping on EWG, which is Germany, pretty darn choppy. So I just go through the country ETFs. Right now, to your question, my friend, I do not have a lot of meaningful allocation outside the US, aside from currencies. So as far as European sectors, I don't get into European sectors. I'm going to have to stick with the markets that are liquid that I have access to here in the US. And then outside of that, I'll play currencies. Probably my most meaningful outside the US position has been short yen and short euro. You can do that via obviously Forex, futures, or ETFs. So right now, no. I hope that changes. And the more we start to get clarity from the central banks, I think we'll probably see a little bit more clarity. Because remember, at the stock or ETF level, because remember, if the U.S. is going to start hiking rates, not that everybody else will too. In fact, I think other countries like to slow down their tightening cycle because that gives their country's currency an advantage on the world trade stage. So they might slow down, but usually, you're going to see other central banks start to get hawkish, and that's going to start to move their currency and likely their equity markets too, as central banks around the world start to minimize and remove accommodation. Because look, everyone's had a very accommodative monetary policy. Everyone's been printing. Everyone's kept rates low. So I think we'll start to see more of what we're seeing in the U.S., and we already are in some of these other ETFs. Thank you for the question, one I don't get very often. All right, do I check out the rest of the world markets on an American holiday? Al, I actually try to do two things. Today, I'm going to be sitting down and working on the automating the spreadsheet for the Sector Secrets Mastery. I'm going to do some basically some office work, if you will. I'm going to look at the markets, reset my multi-charts, Lauren and I have any number of indicators that are always in Raghee labs that we're working on. I might take a look at something like that. I'm going to reset my multi-charts, take a look at indicators that I've been testing. Then I'm going to also use this time to basically update the spreadsheet over at the Mastery and find a way to automate it. So those are the kinds of things that I do on holidays. I've got a Monday where, I want to do something productive. We have football tonight, so that's nice. I can watch a Monday night football, but I don't trade a lot on a U.S. bank holiday. Because if I wanted to, Al, the time to have done it would have been get up early and trade Europe and the UK, or tonight trade Asia. But right here during basically the heart of the US trading session, I won't. I'll just try to get some other work done. So that's what I'll be working on. All right, what's my thought on AMD? Sure. So again, when we start thinking about AMD, we start thinking about what it is that we want to be doing with AMD. We ask ourselves, what are related boats in that tide doing, right? What are related boats in that tide doing? So AMD is definitely buyable, but it's going to be more of a fade. There's your darvis, right? There's your darvis. Well, take a look. Automated here, boom, right? We also have this here. And then I might even keep an eye on this one down in here. So you have another layer of support. Really, you got a wide layer of support in this area. And in CHOP, now what do I want to do? Automate the support and resistance, confirm that we're in a non-trending environment, and then look to see if we're going from red, see here, going from red to green, right? Or just kind of hooking higher, right? Hooking higher on that slow stow, or ready, aim, fire, right? That's your best two ways to go. A 21K 3D slow stow. If you go 70-30 on the readings of the slow stochastic, or if you go 80-20, you're just changing the aggression level of it. Don't change the 21K 3D. Rather, if you want to make this more aggressive, do the default, deviate from the default 80-20, which is more conservative, to a more aggressive default, which is 70-30. And those are very common readings on a slow stochastic, 80-20 or 70-30. One is more conservative, 70-30 is more aggressive, right? So I think we could see that move. But again, you've got earnings coming up. So Jonathan, a lot of what's going to happen for that expiry on January 21 is going to be what kind of momentum and what kind of jockeying for position do we see on AMD before those earnings. But I would be more inclined to say we're going to see support and possibly a move to about the 50% of the current range, which means my initial target, the first target, is going to be right around 140, right around 140. All right, next up, would I be kind enough to go through the JT multi? Sure. So the JT multi, let's take a look at that here. And you know what I'm going to do here, gang? I've drank all my coffee. I'm going to go top that off. I know we've been going for about 38 minutes here. If anybody comes in and says, where did Raghee go? We'll be right back. I'm going to go top my coffee off and we'll be right back. Give me 30 seconds. We'll be right back. All right, we're back. Thanks for the coffee break. All right, let's keep going here. All right, so what would be the way we read this? So I think it's, yes. So the question is, what's a JT multi? It is tracking 8, 13, 21, and 34 period exponential moving averages. So it's just a structure. It's their relation to one another. How is the 8 relating to the 13? How is the 13 relating to the 21? How is the 34 relating to the other three? And that's why they color the way they color. So it's those moving averages. But then after that, this is all you really need to know. And by the way, this indicator is included in my bundle. So those of you that have the bundle that has come with previous classes and that has been available, I mean, this is in there, right? So for those of you wondering, where do I get that? I just throw it in with almost every class that I do because it's so important. And so you have bearish momentum right now over a neutral trend. And for example, in AMD. So do I ensure that they're in a certain order for more than one time frame? I really don't. I'm not a huge fan of multiple time frame analysis. I don't do a lot of it. Is the 5 going with the 15, going with the 30? Normally, what I like to do is backwards. What I like to look at is my main decision-making time frame, and then I might look to a smaller time frame that dissects what's going on inside, mainly for order entry purposes, mainly for understanding near-term momentum as I'm getting in, or if I want to see a little bit of a confirmation of a pause or a very short-term intraday reversal, I might use that shorter term time frame. But normally, no, I'm not really concerned about other time frames. And do I make sure they're in order for? No, I really don't. I like everything to be going in the same direction. And I really like if the daily has the clearest trend. But no, it doesn't have to be. It doesn't have to be. Okay. All right. Raghee, where can I find a primer on these indicators such as darvis, ready, aim, fire, JT multi? So ready, aim, fire is not my indicator. It's the indicator from my dear friend, Mr. David Starr. He's been, those of you that are fans of voodoo lines and ready, aim, fire, and that's his creation. Right at the Simpler Trading website. And of course, you can ask any of us that are using and created these tools in the rooms, but you can find them right at the Simpler Trading website. I believe our Learning Center is really good for that. Our Help Center is really good for that too. So if you're not a member and you're interested in learning more, I think our Help Center has a lot of good breakdowns as well. And of course, if you have more questions, contact support. Hey, Raghee said there's some explanations, maybe in Help or in any of the free content. You'll let them know and they'll help you out. And then if it's one of my tools, I know we usually go through them in the free videos that I do for you all. I covered a lot of the recent action in the free video from Friday. So you can check that out over the Simpler Trading YouTube channel. Levels that could catch a bid. That's the most recent free video. Went through a lot of tools. And then, you know what? Let me give you all something else. I gave this to the members some time ago, but let me give you something else. I'll push it out in there we go. Push it out in the chat and you can check out this link. All right. There's some cool breakdowns of what I'm looking at there as well. All right. Mike asks, what do my blue candles represent? Neutral. Are your white candles the same as a cyan candle? So white. I don't, it's funny when things are, pushed through a screen share, I have a light blue like that. I guess that looks white. And then we have the darker blue here. And those are both neutral. The darker shade of any color, blue, red, or green, is a down close, like a shaded in candle. And the lighter shade is the up close. All right. So the reason I have 6 colors, technically, dark and light of green, red, and blue, is so I can still differentiate up and down closes, which is something that I've always found in the past frustrating with color-coded candles, that they don't differentiate the up close and the down close. So we use the different shade of the same color to do that. And blue is neutral. So yeah, if it looks white here, it's probably just the way it's pushing through. Yes, it's the same as a cyan, Mark. Thank you for the question. Tim asks, how do I analyze my losers? Well, I see them on, so what I do about once a week is I'll take my statement from my platform, whether it be futures or whichever broker, I'll upload it into one of the handful of tracking software that I use. So it takes a statement, they're up in the tracking software, and I analyze their size. I analyze what stopped me out. I analyze my percentage loss. I analyze that percentage loss versus my overall account size. And I just want to make sure that I didn't overlook something in terms of validity for the trade, the point of validity. And I want to make sure I stayed within my math. That's really it. Did I stick with my rules and tools? Did I stick to the action within the risk, my math risk, right? In other words, my predetermined risk, did I stick within that? Did I follow? Was I disciplined? Did I follow my rules? That's how I analyze them. And then I try to move on quick. I tend to beat myself up a lot about losers. If any of you in the Sector Secrets Mastery know, we spend a disproportionate amount of time on losers because that's where you learn. We won, well, that's kind of my job, right? But we spend a lot of time on losers. I think that we learn a lot from breaking down a trade that moved against us. So thanks for the question. Java, I don't. Not that there's anything wrong with ATR or ADX. I don't use them though. For ATR, I have my PMRs, which are historical price movement ranges as opposed to average true range. Very similar, just a different philosophy on how much data to use to determine that range. And as far as ADX goes, which is a popular trend indicator, I've got my JT multi, I've got my grab candle. So it's not that those aren't fine. It's just I have other tools that answer the questions that I need answered about the market for me already, right? There's a lot of overlap, in terms of, why would I use one or the other? It's whatever you prefer, whichever, resonates with you, right? All right. Do I have a link that I can share for anchored VWAP on TOS? There's no anchored VWAP on TOS built in. Yeah. I think the rolling VWAP is, I guess it's better than nothing, but I don't have a link for that, Darren. It's not built into TOS. Yeah, but it is built into TradingView. So that's something you can look at. Look, when I have anchored volume profile and anchored VWAP included in my bundles, it's not because I think I'm doing anything fancy, right? It's because I couldn't find them on the platforms that I use. So I just made sure we coded them up here. It's simpler and they're included in the bundle. But there are platforms where it is included. So check that out. And so all I did with that bundle of volume is I do have an indicator that I created in the V score. And so I said, you know what? Let's just make it a full volume package. V profile, anchored VWAP, and an anchored V score. So you might be able to find it on other platforms, but for TOS, irritatingly, no, it's not available. And I do think the anchored VWAP is exponentially better than a rolling because I want to study the action in a very specific window of time. Okay, so thank you for that. All right, next up is, we talked about AMD. I think we're just about winding down here. Trader Mo asks, what are my settings on the slow stow? Sure. So here you go. We've made this available for a long time. As you can see, this has been up there since 18. So this is the way in which we look at the slow stow. So I'll leave this up on the screen while I move on to the next question. There are the settings. And again, what is the reason for a slow stow as opposed to a regular stochastic? I want to slow it down. And then I take a really slow stochastic and I slow it down some more because I want to, and the whole idea of this, when I first started doing this, is I want to slow down the way in which the indicator oscillates, right? I don't want to use a stochastic. I want to use a slow stochastic. I don't want to use a 7 or 14 setting. I want to use a 21 setting. And that's why I've been using this for a really, really long time. Now, some folks might ask, Rag, why 21? Look, it probably doesn't matter if you use 19. It doesn't really make that much of a signal difference, but you want to slow it down. So basically, it's just more discerning about where the market's overbought or oversold. But remember, you don't want to use this alone. This is actually the second thing you want to use, meaning, as I've always taught, number two, indicators are always the number two thing, maybe number three, right? In other words, price first, indicator second. Price first means, do I have a darvis level? Do I have a volume ledge? Do I have some sort of supported resistance that I'm noticing at the price level, right? Number one, and then I can confirm it with the slow stochastic. That's the way I've always taught this, right? So there you go, Trader Mo. I hope that helps. And by the way, the Darvis you can download for free, my automated support and resistance tool, Darvis 2.0 from countdowntrader.com. The best, and by the way, it's free, right? Maybe people think because it's free, it's not really good. we've been giving away meaningful tools here at Simpler for a lot of years, and that's one of them. And then slow stochastic is built into most platforms. Use those settings. You're going to really like the results. All right. So I hope that makes sense. Okay, JT Multi, that helped. Awesome. Awesome. Okay. Good to know. All right. Are these, Amit, can you use them for the Indian market? This is what I'll say about any of my tools, Amit. And if the market is liquid, if there's sufficient liquidity, open interest, volume, what have you, then the answer is yes. If it's not liquid, doesn't matter if it's a US market or outside the US, if we lack liquidity, then no. Then no. I will not consider any tool, frankly, except for maybe volume. I will not consider any tool really. I think if you go into an illiquid market, you're really so much more exposed to sudden bursts of activity. It's hard to set up. Technical analysis works better in markets that are open more, Forex versus futures versus stocks and ETFs, and have liquidity during those hours. The more liquidity and the more continuity of the trading, I find from my experience, technical analysis in that regard works better. And I promise you all an epic charts and coffee. I hope this has been helpful in terms of, I know we kind of went a little bit longer. I set aside till 10 a.m. So we'll hang out for about maybe another 10 minutes or so. All right. So I hope this has been helpful. Question here. Can I explain the first 30 and last 30 minutes of a trade? Why do markets behave that way? Great question. First 30 minutes are known as the clearing range, right? So this is the opening range or clearing where those conditional orders sitting on the books are being filled. So you get this clearing range high-low between 9:30 and 10. And this happens in any market that opens and closes. The first 20 to 30 minutes is known as the clearing. The last 30 minutes, that's a different psychology. There's no clearing really. You do have market on close orders, which frankly traders make way too much of. I've never used them. They're really not a consistent needle mover. You know, if you know there's a certain amount to be bought or sold, it doesn't always move the market the way people think. So be careful with that. However, the last 30 minutes while having these market on close orders, also there's a saying, amateurs open the market, professionals close it. And it's the last hour to maybe 30 minutes that if traders are looking at a daily or a weekly, that's usually where they're making their decision about buying, selling, holding overnight or not. So I think the end of the day, that last 30 minutes, the psychology is that final decision you're going to make before the markets close. Do you want to get in? Do you like the way the price action has structured throughout the day? Do you want to get out? You don't like the way the price action has been structured through the day. And a lot of traders with longer term timeframes, myself included, I like the last 2 hours of the day, the second half of the day, really. But I'll make my decisions about those a lot of times into the close, because the psychology of something opening is markedly different than the psychology of something closing. It could be the end of the day, end of the week, right? End of the month, end of the quarter, end of the year. End of fill in the blank has a markedly different psychology. And I think that's what we see at the end of the day. All right. Okay. Let's see. Fierce Logic says, I have an older chart from Sector Secrets with the red, yellow, green label. Okay. So you have so before we had the history of the JT, we had the two labels, right? So you've got two boxes sitting up here giving you the current candles reading. Okay. This is the history of that. Which is fine. So one is what's happening at the hard right edge. And that's the labels that you have, or that I've shared in the past and actually still do. The labels show you what's happening on the most recent candle. And then this shows you the history, right? This shows the history of that reading. So the labels, do I use them the same as a JT? I think most traders now don't use the labels. They just look at the very last reading on the JT multi. So Fierce Logic, you can, we have the option to turn that label on and off, but you don't need the label, right? If you have the JT multi history at the bottom of your screen, because the very last reading is what the labels would have. So, but yes, they are used the exact same way. They're measuring the same thing. One is giving you the current read, right, the labels, and the other is giving you the history of that read. So I hope that makes sense. And yeah, the JT Multi, it's available to members of the Sector Secrets Mastery. There are a number of indicators that I make available exclusively to my Mastery people because it's easier to distribute and it's easier to support, whether that be technically or just how to use it. So that's part of the Mastery. And then it's also in the bundle. I know a lot of you bought the bundle, the indicator bundle, where I have the JT Multi, actually everything that I use, but the HPMRs, I believe. We've even thrown my sector slow stow in there because it's just easier to read that 21K 3D with the color changes. Me and my cataracts, it's just easier to read. So we threw that in there as well, although you don't need it because it's built into most platforms. Just change the settings. But yeah, we've thrown that into the indicator bundle. It's oftentimes included with the classes that I teach. I think it's been included almost every time in the classes that I've taught since probably 2018. So if you've taken a class from me, you might see it in the indicators. Yeah. For those of you wondering where the heck do we get it from? Yeah, we made it available in a number of places. All right. So I hope that helps. Next up, hang on. I think we're just about out of questions here. Let's see. All watchers. We are, oh yeah, almost 300 of us in here. Yeah, oh gosh, yes, smash that like button. Yeah, if you got a second, smash that like button. And by the way, if you're watching this on replay, right, you didn't catch it live with almost 300 of us, yeah, feel free to leave a question or comment. Trish is always looking out for that. She's my partner here in the office. She's always looking for, hey, Rog, there was a really good question that got left on the YouTube channel. Yeah, feel free to ask questions, whether that be the free video, which you can catch from Friday here at the YouTube channel, or this video, if you happen to be catching it on replay, leave a question. Yeah, absolutely. And yeah, definitely smash that. Let's get it up to 100. That would be pretty cool. I do appreciate that, Emmanuel. Thank you. All right. Next up is, hang on, gang. Oh gosh. I don't know that I'm the person to help you start over with your finances. And thank you for the question. My first bit of advice is, take care of debt, wherever the bleeding is starting. This is the advice one of my mentors gave me when I first started trading. He said, don't owe a lot, because as a trader, you don't get to just collect your check on Friday for having put the hours in. The market cares not at all whether I punched in or not, right? Punched the clock, so to speak, and got my hours in. The market doesn't care. We don't live in a time economy. We live in a results economy as a trader. So that's a big shift. So stop the bleeding wherever it's coming from as much as you can. But, I always tell everybody, start with reducing debt and that bleeding as much as you can, and then start building even just a little bit of cash. I'm a big fan of just having some cash for those rainy days. That's the first thing, not putting money in the market. Set aside some cash, not a lot, whatever you might need for a month or 2 or 3. I think that's important. I know for me as a trader, my fear was always, what if I don't make money this month? And knowing that I had enough to not make a dime and still pay whatever bills I had, perfect. And then, yeah, you start thinking about how to move forward, right? I think the first step is to stop moving backwards, right? And then you can start moving forward. And one of the things that we're going to be doing starting this quarter, because I've been getting this question so much, is, Rog, how do you structure with the tools that you use? How do you structure your longer term portfolio? How do you think about what to add? How do you think about, and again, I'm not giving investment advice. I'm just sharing what I've learned and the tools that I use to discern between things that I do want in my portfolio and I don't. So we're going to be doing that in March. I have to double check, but that's something we're going to be doing in the Sector Secrets Mastery once a quarter. I don't know if I'm supposed to tell you all this or not, but there it is. Don't tell anybody. But we're going to start to add a little bit more of a longer term approach amongst the trading there, because I get that question so very much. But the advice will always start the same. Stop the bleeding, build a little bit of a cushion, and then start to move forward. All right. So I hope that helps. And I hope, gosh, I wish you the best for that. I hope for some wind at your back and some good fortune. Absolutely. All right. Let me see. I think I'm caught up with the questions. Covered that one. Thank you for the question, Amit. Yeah. So I just got kind of confirmation. Yeah. Trisha said the March open house. We have a March open house and then the April portfolio session. So those of you that have wanted to come kick the tires, check out what we're doing in Sector Secrets Mastery, where we both day trade in the morning, Monday, Wednesday, Friday, and then do the end of day trades where I send out the alerts. Yeah. Come check it out. Come check it out. And, as Trish just reminded me here, a proper savings account is 6 months of living expenses. I like, and that's kind of daunting sometimes. To me, start with one. If you can get to 3, you can get to 6, you can get to a year, always the better, always. And just my experience. And I think as traders, having that cushion makes such a difference in the way that we manage our trades. We're able to manage our trades better when we're not worried about, okay, this bill covers the car payment, this bill covers college, this bill covers the light bill, right? We trade better. We trade according to what we see, not what we need to make to keep the lights on, so to speak. So absolutely. But yeah, it's a March open house, and I'll talk more about it. I know it's only January, but a lot of folks do ask. March open house, and then we're going to do that April portfolio conversation. All right. Let's see here. And yes, thank you for smashing that like button and ask the question. The like button's great. I do appreciate that. But ask the questions. We're here at Simpler to help you, navigate the market, right? Okay. Kim, yeah, Kim, the mastery is what I do as a trader. A lot of the indicators that I use, you mastery folks get that. And yeah, I do want to do everything I can to help you all, just navigate the markets with just more confidence, no doubt. All right. So again, Deborah says, enjoy the football game. It's not till tonight, right? Rams and Cardinals. I don't know who you all are rooting for, but Rams and Cardinals. So, and I appreciate that, Kim. I really, you know what? And I'll tell you all one thing. I've been awful about, we get the alerts out fantastic, promptly, clearly. We get notes out. We have extra videos. And now I'm looking to automate the spreadsheet. So for those of you out there thinking, Rog, I want to know what you're trading, what you have been trading. Actually, today, as soon as I'm done with charts and coffee, I'm going to go jump into a platform that should be able to automate the spreadsheet. So now it's going to be a whole lot easier to keep up with what I have done. The most important thing in the mastery are the alerts, right? That's what's happening now. They're prompt. This is the next action that I want to take. But I realize a lot of folks want to keep this spreadsheet as part of their study. And, if there's anything, look, I'm the first one to say, hey, where can I do better? And I try to find a fix. And that's what we're working on. So going into 2022, we're going to be firing on all cylinders in that mastery. And I'm really looking forward to it. All right. So thank you very much for being part of the Caffeinate and Dominate crew. Thank you for being part of Charts and Coffee. And I will see you all. I'm going to see you all tomorrow for our regular show. Okay. And I think I got all the, natural gas, real quickly. No, not doing anything with Natty yet. But if you want to focus on that 200 propulsion, go ahead and check it out. And then the next question is ITB. I'm not playing ITB. It's actually pretty illiquid, but we are looking at stocks within them. And the main stock has been Pulte. Main stock has been Pulte off the 200 propulsion. So we're still in that one. All right. Where's the love button? Hey there, Steve. That might be a different site. Thank you. Thank you. Jimmy, did I see your question? Oh gosh. No, I did not see your question, Jimmy. My apologies. But ask me again tomorrow and I'll be more than happy to jump in. Thank you all. Thank you all for being a part of the Charts and Coffee crew. Thank you for being a part of the Simpler Trading community. Go check out those free videos at the Simpler Trading YouTube channel, and I'll see you tomorrow. Be good to each other, gang.